Jersey City residents are being asked to pay more. The introduced 2026 budget says a 15.5% municipal tax rate increase would raise roughly $75 million in new revenue. And the question is not just, can the city close a deficit? The question is, before the bill gets pushed back onto residents, who checked the development deals, who checked the tax breaks, who checked the public benefits, and who proved the city collected what it was owed? Because on January 21st, 2026, Jersey City signed an executive order that should make every taxpayer pause. The order said Jersey City still had more than 100 active long-term tax abatements, and the city said it did not know if every rule was being followed. It did not know if every agreement was being monitored. It did not know if the city was receiving all the revenue it should be receiving. This is New Edition Jersey Journal, and this file is about pilots, payments in lieu of taxes, tax abatements, development deals, the promise machine. Now let us be precise. A pilot is not automatically a scandal. A tax abatement is not automatically corruption. Cities use these tools to encourage development, affordable housing, construction, parks, jobs, infrastructure, and other public benefits. But every pilot is a bargain. And when government makes a bargain with public money, the public has the right to see the receipt. And let us raise the standard right now. Do not tell residents the public benefit is just a few affordable units if the units are still expensive, limited, temporary, or impossible for regular people to understand. Do not tell residents a building helps the public because the brochure says community. If the public gives up tax value, the public should get something real. Library space, school infrastructure, public plazas that are actually public, parks, event space, community rooms, youth space, senior space, streets that are safer because the project exists, not just promises, assets, not just renderings, rights. Here is the question for every deal. What was promised? Who checked it? Who got paid? And what happened when the promise did not match the proof? The executive order did not just say audit this someday. It gave the audit a job, review every active abatement, understand the terms and conditions, understand the timeline for each payment increase, determine compliance, identify any abatements that warrant city enforcement action, and complete the citywide audit by July 1st, 2026. So now, as of August 2026, the public question is simple. Where is the audit? Which agreements were reviewed? Which projects complied? Which projects did not? Which payment tiers were missed? Which enforcement options are on the table? And how much money, if any, should have been collected earlier? This opening connects directly to the deficit conversation happening in Jersey City right now. The city says the 2026 budget includes hundreds of millions in operating costs and even more when inherited unpaid bills are counted. The introduced budget materials say part of the plan is a 15.5% municipal tax rate increase meant to raise roughly $75 million in new revenue. So the public is being asked to pay more. Maybe some increase is unavoidable, but it is unfair and unreasonable to raise taxes while major questions are still sitting on the table. Were abatement agreements monitored? Was every payment collected? Were enforcement tools used? Did the public receive durable assets in exchange for incentives? And why should residents be the first place government looks before every public benefit deal has been audited, explained, and enforced? This matters because Jersey City's tax bill is not one number, it is a stack. City, schools, county, debt, assessments, development policy. And when a large project is taken out of the regular tax system and placed into a separate payment agreement, residents deserve to understand what changed. The city has now proposed a school infrastructure account tied to certain pilot revenue. That tells you something. It tells you schools were always part of the real conversation, not as a slogan, as math, as buildings, as capital needs, as the same families opening the same tax bill and asking why the public systems never seem to be fully funded. Canal Crossing is the first test case for the new promise. The city says the project includes 508 homes, 102 affordable homes, a public park, commercial space, union labor, and a 30-year pilot. The ordinance language for the school account says the city may budget an amount equal to 10% of applicable annual service charges into an education infrastructure capital account beginning in the second year. That sounds like a deal. Now the paper trail has to answer whether it is a deal the public can measure. Where is the financial agreement? Where is the council vote? Where is the payment schedule? Where is the affordable housing requirement? Where is the enforcement clause? Where is the yearly compliance report? And where is the public space the neighborhood can actually use without buying anything? Because this is the part people miss. The headline is not the deal, the ribbon cutting is not the deal, the rendering is not the deal is the document, and the document has to survive contact with real life. So episode 5 is not asking you to hate development, it is asking you to understand development, because a city can grow and still leave residents carrying costs they were told growth would solve. A skyline can rise while a school still needs repairs. A project can say affordable while the public still needs to see who qualifies, how long it stays affordable, and who audits the list. And this is where Five Corners enters the file. The Jersey City Free Public Library says the Five Corners branch will remain closed until further notice because of extensive maintenance issues. Local reporting says that branch served the Journal Square community for decades, so here's the public benefit question. If Journal Square and Five Corners can absorb towers, abatements, redevelopment plans, and luxury rental growth, why does the neighborhood lose a library branch? Why is there not a permanent public library space written into one of these development bargains? Why not a public reading room? Why not a community room? Why not an event space? Why not a plaza that belongs to the public in practice, not just in a planning board sentence? This is where Durham, North Carolina becomes useful. Durham is not perfect, but Durham shows what public reinvestment can do when a city treats libraries and civic buildings as public symbols, not leftovers. Durham County Library says its main library was transformed after a 2016 bond referendum. The building was taken down to the studs and foundation. It grew from roughly 65,000 square feet to 85,000 square feet, and the design by Vines Architecture won the NOMA Phil Freelon Professional Design Award and an AIA North Carolina Merit Award. And Phil Freelon matters here because his Durham legacy proves the point. World-class civic design is not only for museums, towers, and private amenities. It can be transportation centers, human services buildings, libraries, public places that tell residents, this city invested in you. Jersey City is not short on award-winning talent. It is not short on land value. It is not short on developers. It is not short on money moving through the system. The old public buildings had charm, but charm without reinvestment becomes decay. And when a city lets public assets decay while private development keeps getting incentives, that is not scarcity, that is mismanagement. At this level, it becomes egregious. And there is one more question this episode has to open: ownership. Because if every subsidized development becomes another rental building, then the city is not only deciding where people live, it is deciding whether working families ever build equity. In a high land value city, nobody is saying every new home has to be a detached house with a yard. That is not the point. The point is creativity, dense ownership, condo-style buildings, family-sized ownership units, limited equity models, community land trusts, small lot and stacked housing, zoning and ordinances that let people own in the city instead of renting forever in the shadow of buildings their tax dollars help to make possible. Because rental affordability can help someone survive, ownership is how a family starts to build power. If the public is giving incentives, the public should ask, where is the path from tenancy to equity? That is what public benefit should mean, not only units, not only a ribbon cutting, not only an affordable housing headline that still leaves working residents priced out. The public should be able to point to the thing and say, we gave the incentive, and this is what the people got back. A pilot can bring in revenue and still raise the question, who got the better end of the bargain? Before anyone asks residents to trust another promise, show the file, the agreement, the vote, the schedule, the audit, the enforcement record, the school impact, the public benefit, the public space, the ownership path, not the press release, the proof. This is why pride, property, and power matters. The book touches the language behind ownership, taxes, development deals, public space, and power. This series is the deep dive into the public records behind those themes. Pride in a place is not the same thing as equity in a place. Learn the language before the bill arrives.